Distinguished speakers, dear guests, we shouldn't punish the ones that are punctual, so even so not all of you arrived yet, but let's get started. On behalf of the Asia Society Switzerland, it is a particular pleasure for me to welcome so many of you at today's event. We brought the Asia Society to Switzerland 2 years ago. It is a young venture that we are launching here because we are enthusiastic about Asia and we are convinced that Asia will help shape our future in many ways, economically, politically, and culturally. In order to remain successful in an increasingly connected world, it is not only Switzerland that must look out to the Far East. It is essential for all to develop relations with all Asian countries because it's the only way to understand how Asia is developing. It is the mission of the Asia Society Switzerland to prepare our country, our small country but open society, to this future. We organized more than 30 events last year, and the topics range from fintech to geopolitics and to classical music. In addition, we run a number of long-term initiatives, and one of our cornerstones will be a Young Leaders Conference that we are planning and forging out. Hopefully it will take place the first time early next year. And the idea is very simple. We want to copy what has been done about 30 years ago when we launched the American-Swiss Young Leader Conference, which has resulted in a very lively and well-regarded alumni organization. Leaders that eventually move up the ranks, that connect the two societies and the two businesses together. The same should happen with Asia and Switzerland, and we are very, very hopeful that we will start this early next year, bringing together 10 of the smartest young Asian leaders with the equivalent over here in Switzerland. Actually, this is our first event on fintech, and in view of the great interest, it will certainly not be the last one. Therefore, I very much look forward to welcoming you at our future events. A small note, if you would like to support our mission, please do not hesitate to become a member and ask some of our staff here that is present. We have, I think, the full staff here tonight, so please go and see what you can do. We have student participation, we have family participation, we have corporate sponsors and donors, so we have all different categories. We need your participation to be successful going forward. UBS has supported our work right from the start, and we are very grateful to have found such a committed and dedicated partner. Today's event is the result of a highly professional cooperation between our two organizations. Let me finish by wishing you all an informative and inspiring evening and introducing you to our host tonight, Mr. Ji-Won Yoon, Divisional Vice Chairman of Global Wealth Management at UBS. It is a particular pleasure to work with you. Thank you so much for making this possible. Thank you.
Thank you so much. Thank you. Thank you very much, Raymond. Distinguished speakers, dear guests, dear colleagues, it is my great pleasure to welcome you today to China-Swiss Fintech Forum, co-hosted by the Asia Society Switzerland and UBS. Let me start with a question. Who is the largest bank in the world? No, it is not UBS. And yes, it is a Chinese company. If you go by the number of customers, it is not ICBC, nor China Postal Savings Bank, which incidentally has 40,000 outlets and 520 million customers. It is WeChat, the Chinese social and messenger app owned by Tencent, who has 1 billion registered users. Of course, this is not an exact or fair comparison, but it shows how dominant fintech has become in China. The mobile payment volume of the country is 50 times bigger than in the US. in the streets of Beijing, you can actually pay beggars by scanning a QR code. And the hongbao, the traditional red envelopes with money, which are given as gifts during Chinese New Year, are today more often than not sent through an app. And it's just not payments on mobile alone. China is also leading in P2P lending. 9 of the 27 fintech unicorns, or startups that are worth more than $1 billion US, are also based in China. So how did China get to this point? Well, hopefully, we'll hear about all of this in the next hour and a half or so. But one answer is the country's rapid digitization. It now has 800 million internet users, more than the entire population of Europe, 98% of which use mobile, as China literally jumped over the PC revolution, and thus many people were not really onto the internet via computers, but simply leapfrogged onto mobile. Combine this with an equally fast-growing middle class, which was and still is underserved by existing commercial banks. Add a light touch, regulatory touch, and limited concern from customers about privacy and data protection, or let's say less sensitive than versus the European clients, let's say. And you have in many ways an ideal set of conditions for the explosion in fintech innovation. Over the last decades, we have often looked towards the West, Silicon Valley, for example, for technological innovation and ideas. Increasingly, however, I believe that we also have to look east, not just for fintech, but for many other areas as well, including biotech and AI. Now, I would also note that in Switzerland, with its world-renowned financial center and excellent universities, Switzerland has also developed its own vibrant fintech ecosystem. And the Zurich region here is certainly a hotbed in that respect. However, the market and the conditions in Switzerland are fundamentally different, and in many aspects, not as developed as those in China. And these differences, in my mind, create learning opportunities that we would like to address with tonight's event. And we're very happy to have 3 excellent speakers with us who have traveled from China to share their insights and give us an idea of how Chinese fintechs work. Of course, this is a very vast, complex, and rapidly changing topic, and we couldn't possibly hope to explore it in one evening. Hence, we hope that this event is considered as a one step in an ongoing conversation and mutual learning between Switzerland and China. And we certainly hope that these types of interactions will continue for a long time to come. Tonight's event will be moderated by Mark Anderson, Managing Director of UBS Global Wealth Management, Chief Investment Office, as well as a co-founder of Swiss Lab, a Swiss fintech company specialized in investments and data management. As such, he is extremely well positioned to lead us through this event. And now he will introduce our first keynote speaker. Thank you again for joining us this evening. Over to you, Mark. Thank you.
Thank you very much. Thank you very much, T1. Thanks for putting a little bit of pressure here as the excellent moderator with what I would call 3 definitely distinguished guest speakers we have today. So I can only say you did very wisely when you signed up for this event tonight. I think you'll find that you will leave this evening with a lot more knowledge around fintech and the pace of things in China. It's with great pleasure indeed that I'm introducing the first or the keynote speaker of tonight, which is Carl Yeung from Zhejiang. He's the CFO of what is the second largest fintech company in the world, only behind Alipay on a KPMG survey. Carl has been serving as the CFO since 2016. And just to get you a little bit into the mode of things, how quickly things develop, the company was founded in 2014, and already last year in the fall of 2017 listed in the US as a public traded company. Prior to joining Zhejiang, Carl was the co-founder of Bao Bei E-commerce Limited since 2015. I hope I got this one right. You can say it correctly afterwards, Carl. From 2013 to 2016, Carl served as a CFO and CSO of Bio Family Interactive, a children's web game developer listed on the Hong Kong Stock Exchange. From 2010 to 2013, he served as the CFO of Sky Mobi, which is a leading mobile ad platform, previously listed on NASDAQ. And from 2006 to 2010, Carl was the CFO of ATA, a computer-based testing provider and listed on NASDAQ. And here comes the most hopeful thing for those of us that started in the banking career, which is that Carl actually from 2002 to 2006 was working in a bank, also Merrill Lynch. So thanks for providing us this backing here, Carl. From an educational point of view, Carl, he got his bachelor's degree in economics with concentration in finance and operations management from the Wharton School, University of Pennsylvania, and his bachelor's degree in applied science with a concentration in systems engineering from the School of Engineering and Applied Sciences, University of Pennsylvania in 2002. Well, with that introduction, Carl, please come on the stage and give us a few insights.
Thank you, Mark, distinguished guests and hosts. It is really, truly an honor to be here in Zurich, the global center of finance, literally. So our topic tonight is fintech, and I am humbled to be the keynote speaker because we're just a young and small company. But it is time for me to share as much candidness as possible. So forgive me if I jump back and forth a little bit. I don't have any prepared remarks. I hope this to be very honest and a sharing opportunity instead. So first of all, appreciate, Mark, that you mentioned the list of the global top fintech companies in the world. We have been ranked, Chudian, as the #2 top 100 out of the 100 fintech companies in the world for 3 years. The #1 company is Alipay, which is one of our shareholders, and one of our strongest partners in what we do. But what's more interesting is if you look down that list of the top 100 fintech companies globally, in the top 10, half are in China. Why is that the case? Because China offered so much in terms of regulatory, relatively relaxed, not anymore, but in the last few years, relatively relaxed environment, in a very, very large population. And I'll touch in some ways about those, but the Chinese entrepreneur have been very, very aggressive in terms of continuing to explore new ways to reinvent how finance should be done. And I'll also talk about that. So what about the population? I'll introduce something quite a bit on the side first. Just last year, the Denmark embassy in Beijing posted on a very popular social network that Denmark's coastal line had a problem. Too many predatory oysters. You know what happened? The Chinese people replied and said, we'll just come and eat them. And you know what the result would be? If that happens, it will cause a global extinction of oysters. So this is the size of the population. 1.4 billion people. But that's just a number. I want to spend some time today to actually break it down a little bit for you. 1.4 billion people represents one of the largest market in terms of population. But I'll tell you something first. There's only 200 million credit card holders. So traditional commercial banking from a credit perspective has really never penetrated China. And my bold guess is it may not. See, some things happen in China in interesting ways. I like to draw a lot of sort of parallel to the industry called telecom industry because it's also very, very large and it's changed the life of everything we do today. See, China actually skipped something called a fixed line. People don't install a fixed line at their home. They just went to mobile. And when they went on mobile, we actually skipped essentially 3G and went straight to 4G. Something similar is happening in China regarding credit as well. There may be 200 million credit card holders today. There might be 0 tomorrow. Why? Because we have found new ways to serve customers that have been not available anywhere else in the world. One of the key things that's happening in China is we've turned into a cashless society, truly cashless society. In fact, for myself, I'm a little bit old school. I still dress kind of like a banker from Merrill Lynch days. Well, I guarantee you I don't dress like this in the office. I would be looked upon really strangely. Our average age in the office is actually about 24 years old. And that's actually of great importance. And then if I have time, I'll explain that. But I'm a bit old school, so I still carry my wallet around sometimes. But what I realize is I actually haven't really pulled it out and took cash or credit card really for the last 30 to 60 days when I live in China. Only when I come to Europe and I travel to the US, I have to pull out my credit card. It's almost cultural now. And I put you in a situation like this. If I go to a supermarket, everybody goes to a supermarket, even billionaires here, right? You would go to a supermarket, and typically you go to a supermarket in China, and there will be 30, 40, 50 people lined up behind you. That's just massive amounts of people. And if you dare to pull out your credit card, everybody will look at you like, where did this guy come from? Right? So the culture shift has changed. It's not cool to pull out your credit card. It's just not cool. So what do people do? They use options such as Alipay, such as Tenpay, scan and go, extremely efficient. Now, I want to break down that 1.4 billion people further. Why is that the case? There's only 200 million people with credit card. It's not like the banks are lazy, right? We have several of the biggest banks in China with the great distribution network, but why aren't they issuing credit cards, giving credit to people? Because one of the biggest things in fintech is credit, and that's why I'm here as well, because Qudian deals with credit. The reason is because although, let me make it a little bit interactive. How many people have been to China before? If I just may, please. So everyone, almost. I'm glad. Come again, please. And look at it this way. So you've probably been to big cities like Beijing, Shanghai, Guangzhou, Shenzhen, right? I can tell you it's actually not the real China. The real China lives on less than $600 of income per month. You see everyone with the Mercedes and BMWs and some cases Rolls-Royce and private jets. That's only the smallest fraction of the real user economy. Most of the people still work in factories, work at a restaurant. A lot of people are delivering packaged goods. We all know Alibaba, JD.com with the e-commerce, literally revolutionized retail in China now, right? You know what else is happening? When people in our office, when they want to eat, they don't call, they go to the app. Within 30 minutes, the food is delivered onto the table. People are getting food. You know how many people are delivering food in China? I looked at this just a month ago. 4 million people are on scooters delivering food. That's the size of people, the working class, and they are making less than $600 a month. That's the problem. It's not the banks don't want to serve them. Credit only works if it's profitable. If this person is making $600 per month, you're not going to be giving them $5,000, $10,000. It just doesn't make sense. You're going to help them go over the cliff, right? So the suitable credit size for these people, everybody needs credit. To give these people is roughly $100 to $200 to get their consumption credit going. But what does 100, 200 US dollar mean? I'm sure we all went to good colleges. That's why, we're very smart people. The math doesn't work. And I'll tell you the math. At 200 US dollars of a credit, for example, at 10% APR a year, maximum is what? It's easy, 20 US dollars, right? But you won't lend out 200 US dollars of credit for a year. You lend it out for what, say a month, 2 months? How much can you get from, let's just make it very simple. 20 US dollars divided by what, 6? That's only a few US dollars. The processing cost of a major bank to actually do a credit is way beyond that. That's why it doesn't make sense. That's why developing economies with low income, they can't get access to credit. But think about it this way. Now, I apologize because UBS is a bank. And I will point out at the very end of this keynote that we're not in the position to actually revolutionize the way banks. We're actually working with a lot of banks as partners to solve this problem. For a bank to actually get into this product, it's almost impossible. So what the fintech companies have done, because, as I mentioned, everybody's on mobile, accessing these users are available through online ways. The cost of accessibility has come very, very low. And because there is 600 million people, out of 1.4 billion, take away the 200 million people who's got that income to get a credit card, take away the too young and too old, you still have about 700 million people that working class, making 600 US dollars a month. They're all online. So what we can do is get on these internet mobile payment platforms to serve them at a very low cost way. And because these people are buying things, e-commerce, online, ordering food on the mobile, all that data is available for us to look at and analyze the credit. So what we have solved are two main problems that a traditional bank cannot really do well. The first one is actually determine credit for the credit invisible. Think about what a traditional bank does. We all apply for credit cards, right? They ask for your employment records, bank statement, cash flow. The bank's credit models are all derived from these cash flow analytics, looking at a person's ability to repay. So essentially, banks are providing credit to the people who are already got money. But think about people who are making 600 US dollars a month. These are people who can produce these kind of cash flows for a bank to access credit. So what we have innovated on, big part of fintech is innovation, is analyzing a person's willingness to repay. Ability, willingness, two different concepts. But because of mobile internet, because all these transactions are happening and there's data available to analyze these behaviors, we can analyze these behaviors and make credit decisions. So we solve the problem of credit decisioning. The second problem is costs. We use large-scale AI to make determining credit so low cost. The actual cost, the complete operating cost from marketing, sales and marketing, R&D, G&A, is 11 RMB, which is just under $2 US. That's why we can make that 150 US dollar credit viable at about $8 US of cost to our customers. That's what we have done. And given that the population and the scale is so big, all the fixed costs that we invested in can be spread over in massive volume. And how massive it is. We are processing about 1 million transactions a day, approximately 40,000 transactions an hour on a 24-hour basis. Think about how many tellers or windows you need to have if you were have to set up retail locations. This is the wonder of technology. And this is what fintech is about. Efficiency, solving problems. And what we do is we work with banks to get their capital to be served into this market. Now, I know I don't have too much more time, so I want to leave a bit of thought for everyone. One of the key drivers that makes us we actually work fairly long hours because we're very driven. We believe fintech is one of the biggest opportunities in the next 5 to 10 years. And I'm glad everyone is here participating because it is going to be. We saw an industry, again, telecom, change into something called the internet. See, actually, theoretically, the biggest internet companies, Facebook, Amazon, Alibaba, Tencent, with 1 billion users, shouldn't really exist because the telecom operators own the infrastructure, they own the data, they own the billing relationship, they know who is talking to each other. Why did internet companies came about? Because telecom companies were too slow. They weren't moving and changing while users are changing. The same thing, well, look what internet's done is change out everything we do, from e-commerce to social networking. Similar thing is happening because internet and technology is entering the fin space, the financial space. That's why there's so much attention on this sector. Obviously, a lot of wealth is being created by these traders on Bitcoin and things like that, but that's only a small part. Think about the impact of technology on the financial sector. There will be great companies, massive companies, that are user-focused, that may be serving these users, while the banks that don't move forward become wholesale deposit takers and wholesale funders, just like what the telecom companies do today. A big thing is changing, and we're going to witness it in the next 5 to 10 years. We're already seeing a lot of things happening in China, so when you have a chance, come, take a look, stand in front of the supermarket line, pull out your credit card. Thank you very much.
Well, with that, I would like to invite the three of you on stage with me for the panel. Thank you very much for the inspiring speech here, Carl, to kick things off with. So joining us on stage as well is Wei, who is managing partner at Arbor Ventures, and we have Hongqiang, who is the CFO at Byron Financial Information Services, also known as Under Credit. With that being said, would you like to give maybe a short introduction of who you are and what you do for the audience?
Sure. Hi, my name is Wei Hopeman. As Mark mentioned, I'm a co-founder and managing partner of Arbor Ventures. We were the first and now the largest fintech-focused venture fund in Asia. I remember when we were raising our very first fund, this was 2013, everybody asked us why fintech, because it wasn't a proper noun yet. Well, we just closed our second fund and nobody asked that question. And the reason we ended up picking fintech as a focus is prior to that, I used to run Citi Ventures in Asia, which is Citigroup's venture and innovation arm. And I saw firsthand how difficult it was for a large incumbent to innovate. Even though it was sort of on the forefront of setting up an innovation team, it was still very, very difficult to get the business units to change their behavior, change the way they serve their customers. Where at the same time, I saw a lot of opportunities coming from the startup community who are really innovating at the edge and really connecting to their customers, be it consumers or corporates. Which is how kind of Arbor got started. And we actually take a global view for investing because we believe that money knows no boundaries. But Asia is our home market, so for non-Asian companies that we invest in, we help them to grow in Asia. And within Asia, I live in Shanghai, so we invest in China. We're also increasingly looking at Southeast Asia, where we're seeing similar growth trajectories as well.
Thank you, Wei. Hong?
Oh, great. Well, my name is Hong Zhao. I'm the CFO for 100 Credit, or in Chinese it's Byron. It's literal translation, 100 Credit. It is the largest third-party big data service platform that actually supports a lot of the fintech companies, also including a lot of banks. We're now serving over 3,000 financial institutions in China. And on a daily basis, we're actually helping all these financial institutions process over 3 million loans. What we do is we use the big data technology on cloud-based service model, as well as use the big data to really figure out the best way to assess creditworthiness of individuals, applicants that are traditionally not covered by the PBOC's credit reporting system. So that is a very, very interesting niche. When we started the bank, I just remember 3 years ago when we started talking to banks, they feel like big data is just some sort of very mysterious concept that you can't really see through, right? You have big data, so big deal. But today, if you go to the banks, if you say, if you don't say you have big data, then they look at you like you're, the last generation of tech people. So the concept has been very well received in China, and today, we are really the largest, I would call it infrastructure or biggest enabler in this field to enable fintech companies, including Carl's, China institution, and also some of the other smaller fintech companies, as well as micro-lending regional firms in China to really extend their business, give them a really tool, very, very useful and very efficient tool to help them to expand their business and providing credit to the people that traditionally been ignored or underserved by the, I would call it traditional financial institutions. So yeah, that's what we do.
Thanks a lot for the introduction. I think for the audience, I mean, Carl, you gave a bit some remarks about Chinese fintech and so on, but I would like to maybe for the audience give a bit more of an introduction. Wei, I think you're very well placed maybe to share some observations. You said you set up your first fund in 2013. These young gentlemen basically came along in 2014, so timing was kind of perfect.
Better lucky sometimes, right?
So Carl, he mentioned there's obviously population growth, regulation, and so forth. But what are kind of the key success factors to your mind? What was driving this very, very rapid development that we've been seeing in China?
I think Carl touched upon quite a bit of that. Obviously the underlying market is very huge, but at the same time, vast majority of the market was underserved. So there was tremendous demand for financial products that's not being delivered by traditional incumbents. Two, the whole growth of the entrepreneurial ecosystem in China, right? So the whole startup scene, if you will, in China really happened back in, I would say, 1998, 1999. I remember the very first time I met Jack Ma in 1999, he had just raised his first round of funding on Sand Hill, and I was going to business school at Stanford at the time. We invited him to come and speak. Nobody showed up except for the 5 Chinese students because nobody knew who. Not that we really knew who Jack Ma was, but we were very excited that a Chinese company managed to raise funding from Sand Hill Road. Fast forward, to today or even 2013, the tech ecosystem was such that they're spinning off, serial entrepreneurs, people who have learned the trade and grew up in this vastly, rapidly evolving landscape. And at the same time, what we do for a living, which is venture capital, back in 1998, the industry barely existed in China. Today, it's by far the second largest market in the world behind the US. So there's a lot of availability of funding as well. So you had a huge market demand. You had a lot of really smart entrepreneurial people, and you have readily accessible funding. So all of that, I think, created a huge startup boom. At the same time, I think Carl touched upon it slightly, the regulatory environment around financial services, particularly with fintech, was relatively benign. From a startup's perspective, I think that, they only issued the first third-party payments license in 2011, but by then Alipay already had hundreds of millions of users, so you can no longer say we don't want this industry to exist. And similar thing happened in peer-to-peer lending space. The industry grew to such a size that the government will not kill it, but it figures out how to regulate around it, and in partnership, actually, that's the key point, in partnership with a lot of the leading players to actually co-write the regulations in such a way that still gives the players enough room to function and innovate, but at the same time protects sort of the society's interests at large. And I think all of that has led to, I think, China being a real, a lot of countries or places try to set up, test centers or areas where they try to innovate. I would say all of China is one giant sort of incubator, if you will.
Hong, maybe on your side, I mean, you work with all of the large banks in China, basically, and I guess beyond. How would you put some words around this ecosystem where on one hand side, you manage to have access to the regulators, you have a regular dialogue, but at the same time form partnerships with most financial institutions? Can you describe how that looks like, which I think is very, very unusual from maybe at least from a Swiss or Western perspective?
Yes. Well, it definitely can shed some light on the interest dynamic. I mean, I think Wei actually touched upon it earlier. The regulator in China, they're not, they're actually very open-minded when you are really up close to them. We talked about it, at the other session earlier. They really are looking. They're very keen on the innovation in the marketplace, and they really wanted to make sure that this innovation gets sort of not trickled down, but that definitely gets adapted by the banks. By the major institutions, because they think that is the sort of the corner or the cornerstone for the entire finance system, and but they're also afraid of a lot of because quite frankly it's because a lot of these innovations is very hard to understand. For instance, Carl just touched upon you have these micro loans that are like $150 US per loan, and the transaction happens on a numerous basis on every minute. For these regulators, they really don't have that exposure. If they don't work in that sector or never had experience working at a fintech company, it's very hard for them to understand that. And we actually have some of our clients on our platform. Those are gaming companies. They extend credit even more micro. It's like 20 RMB per loan. It's impossible for any institution that are traditional banks to extend their credit. But if a person are playing a game and they want to buy a weapon really quickly, virtual weapon, very quickly, hey, 25 RMB, right? But then it has to be based on some level of risk detection, right? This guy is a real person. His IDs all match. He's using the same IP address. The location hasn't changed in the past few minutes. So these are all the things that are instantaneous. So you have to support them to be able to allow them to extend that credit. And it really enhances also the gamer's experience. So we partner with those platforms also. So and you also have some on our platform. We also have large banks that are purely credit card focused. They just wanted to do the credit cards, even though in China, yes, we have 200 million people that have credit cards, but total number of cards issued is close to 800 million. So on average, everybody has like 3 or 4 cards. Yeah, I mean, you pull out which one, right? I mean, you do pull out credit cards from time to time, but for the banks, they always wanted to increase sort of the activity for people to use their credit card. But on the other hand, when we look at the sort of the other spectrum of our clients, those are the guys like Chudian and Lucian and all these others, and a few of them are already listed in the States. Those guys are constantly innovating. I mean, for little niche, a very small niche, they will actually develop some sort of financial product. You can to help you to go through the transaction as a very efficient way. And so the banks, of course, because of the structure, it's very hard for them to quickly catch up, right? No bank can say, I'm going to forego all my existing, risk control policies and framework and adopt, the fintech way. They can only do it on a gradual basis, and I think the regulators sees that, and they see that, and they wanted to make sure that we give enough room or give enough time for the traditional. I don't want to call it traditional, but for the major institutions or mainstream institutions to really start to adapt to the pace of the fintechs to catch up a little bit. But overall, though, I think banks are. We talk to the banks also. They don't view the fintech companies as competitor. I think Carl touched upon that as well. I mean, they're really not. They're just coexisting in the same sort of financial services sector, right? They're just providing different type of financial products. But these days, I think that boundary become to kind of blur a little bit, because you do have some fintech companies that are doing the sort of what we call a credit debt restructuring. So if you have a credit card debt that you don't have ability to pay, then some other will provide a solution, a short-term bridge to help you to do that. So it's one way is helping the bank to actually lower the level of default on their books, right? But on the other hand, these credit card holders that almost went to early default or went to default, they can have another sort of a longer term debt at a slightly higher interest, but then that can help them to manage their credit better. So you see that in real practice that becomes almost like a partnership to really help to manage people's credit across the board. So yeah, we saw that. It's a very interesting dynamic.
Maybe another thing I would like to come back to you, Carl, just to give the audience a bit of a sense of this speed of light pace and the way you're thinking about kind of agile leadership, innovation, and so forth. I mean, you founded in 2014. Can you give the audience a little bit of a sense of the mindset you come in with, and where you started as a company, and how rapidly, I guess, you've changed the business model or developed it as you move along? Yeah. Yeah.
Yeah. So, and that was I had the pleasure to share with this at the UBS University just yesterday, actually, 2 days ago, actually. So it almost is a must as corporate core management. We're almost trained, at least in China, to believe in one very specific ideology, is if you don't change, your death is imminent. Because the consumers are changing so fast. Your competitor is cutthroat. There's a competition called Chinese competition. When some opportunity comes, everybody will rush in until there's zero profit or even negative profit. So your business model has to continue to change, or else you will die. And especially in the fintech space, coming to back to the topic, fintech, we are ahead, usually ahead of regulation. So we started at Qudian actually as one of the nation's, China's largest campus consumption loan provider, just like almost like SoFi in the US. That's a multi-billion valued company as well. But we had to very quickly identify what the risks are and exited. We exited the market and went on to electronic payment platform to serve that micro low-cost credit, because we knew there were more and more media talking about campus loans hurting students. We weren't doing it, but other 1,000 companies were doing that. So we exited and we innovated and left. And when we developed a very large micro lending business, and along with our IPO, a lot of media caught attention and wrote a lot of bad things about micro loans. Naturally, regulation came. And we had to change and pivot into now we're building an auto leasing, still a credit-based scenario, technology, a low-cost solution. So we had to continue to pivot. So competition, regulation will continue to drive an entrepreneur in China to think if we don't change, certainty will happen. Yeah.
Wei, maybe from an investor's point of view, this makes it kind of difficult because you might be buying one company and then the next year you have another company. Is that, in many ways, I guess you will be looking at the leadership that will have the ability to change in this kind of direction, but how are you assessing a team? And maybe you could say, well, these gentlemen have obviously been benefiting from the trend on the lending scene in general. So what kind of qualities are you looking for, and how interesting is the lending space in this category?
I absolutely, we always believe ideas are a dime a dozen. No single person has sort of monopoly on great ideas. There are a lot of smart people out there. It's not about the idea, it's about the ability to execute. And part of that execution is learning how to pivot when you need to. So for us, we're early stage investors. We're typically Series A is the first institution no money into businesses. So a lot of times, there aren't real metrics to look at from a business perspective. Maybe they have users, but they don't have revenue. If they have revenue, they probably still have negative gross margin. I hate to say it a lot of times. So how do you believe that this guy out of the 5,000 companies that do exactly the same thing, is going to be the one who succeed? So we spend a lot of time, right, studying the teams, analyzing Brazilian team, where their historical track records have been. Obviously, some people are serial entrepreneurs, so you have something to go by. Other people are not. But we spend a lot of time with the team thinking about how do they think about ideas, where do ideas come from, how do they work together, how do they view the competitive landscape, who do they see as competitors. I think a lot of times, particularly in Western part of the world, people say, well, this is what I do, so these are my competitors. In China especially, this is what you do, but all these guys are your competitors, because people pivot so quickly and people are able to leverage what they have in one sort of space and very rapidly sort of build out a whole suite of offerings that may be very different than what they were doing yesterday or last year. So you have to have entrepreneurs who are capable of thinking not just this way, but also seeing what's going to hit them orthogonally. Who are the competitors that they don't face today, but might be competitors down the road? So these are like conversations we have before we invest, obviously. I think, in the lending space, we were quite fortunate as we backed, one of the biggest peer-to-peer lenders in China. Hopefully they will go public this year if the regulations ever get sorted out. I think, again, it's about people who not only do they have a great product, but can they leverage resources around them? I think in Qudian's case, you were able to leverage Alipay's ecosystem. The company we back, our Lufax, they were able to leverage Ping An's ecosystem. So it's about, how do you smartly leverage access to particularly data, right? I think at the end of the day, if we look at what's happened, particularly in our part of the world, it's aggregation of data. If you aggregation of flow, and that flow comes in the form of people, data, and ultimately payments, right? And if you can tap into that, you can basically own the world, which is what Ali and Tencent, they're all doing today, right?
I mean, talking about data, I guess this is probably considered by many the world's most valuable asset today, and how you analyze it. And I guess, Hong, this is where you come in. How do you assess data in different ways? How are you more interesting than a traditional bank when you look at data and provide that credit service?
Yeah, I mean, we are, the largest data third party, I call it big data service platform. In terms of, this doesn't come by, as I said earlier, the first time when we talk to a bank, they really feel like, this is a great concept, but then, how does that really, work? I have the PBOC score, what do we do? And, we had actually a real case where it's a largest bank, probably ranked number 7 in China. Ranked number 7 is actually pretty darn good. I mean, in China, in that big market. They actually went to a city, a third-tier city, which is, in the Jiangsu province. And they're trying to issue credit cards, and they realize they're trying to issue credit cards online, and they realize that out of the 100 applicants that come online and submit applications, they can only match about 17 of them with some sort of PBOC report, which is a credit report that's official in China. And then they realize also, even out of that 17, about 1/3 of that, about 5 of them, really do not have a complete picture. They cannot use the limited amount of data or dimension of data on the PBOC credit report to make assessment whether to extend a credit card to that person or not. So they turn around and get to us and say, hey guys, can you help us out here? So what we did is we took that back to our database. We match as many dimensions as possible, brand preferences, spending habits, and also, stability assessments, locations, and also, quite frankly, travel patterns and some of the other, and a series of other dimensions. And we put it together, build a little profile, and we realized, first of all, out of the 100, we were able to call back another probably 48 or 50 of those guys. So out of the 17, we can match in our system, and we added another 50-ish. So now all of a sudden you have over 70%, or close to over 70% of the people that you are able to at least do some level of assessment. Now you have data, right? You have data points, and then the question comes: how do you assess, right? I mean, these are just profile tags. How do you weight every one of these variables and really come up with a score that makes sense? And that took us a while. I say a while is in internet terms. It's really just 2 weeks with our data analysts. And it's very interesting, right? People with iPhones, typically, at that time, back in 2012, iPhones are still considered very luxury, not like today, it's everywhere. But at that time, if you have an iPhone and you typically buy one of those luxury brands, we think, you're probably one of the upper class, and you fly to, business-heavy cities, usually first-tier, second-tier cities, and you fly frequently, and you are, a gold card member or whatever. And, just some of those, we call it, at that time, it was artificial. I mean, it was intelligent, but it's purely artificial. I mean, it was the data analysts that really come up with these ideas and say, hey, this makes sense, right? I mean, and then, we would build that together and realize that after, we were able to improve their approval percentage from, originally, if they just used the PBOC number, they're right around like 10, 12%. And we were able to improve that over to like close to 40, 46%. So that's very, very good for them. I mean, it saves a lot of, you think about banking, right? You spend a lot of money doing the marketing, getting all these guys online to submit credit card applications. And now all of a sudden you increase your efficiency by 4 times. Efficiency return on your advertising dollar by 4 times. So the business side of the banking are very, very happy. And then also they keep tracking all these people. And they realize that these people are more willing to swipe the cards. They're more active. They tend to, they tend to use some of the installment payment function or some sort of, installment repayment mechanism more often than the regular guys. And the actual bad debt loss or credit loss for that particular population, I said 100 was just in percentage-wise. So total about 40,000 of these guys. And when you look at that sample, the ones that we approved under our sort of scoring system tend to be more active, first of all, and tend to have less, usually 1/3 of the credit loss compared to the entire population of the bank. So they're very happy. So they become one of our first clients. It's China Merchant Bank. They're very innovative as well. So basically, the rest is history. I mean, we started, talking to all the banks and we realized, now all of a sudden we have these other dimensions that we haven't been using. There are ways to also, help us, the banks, to improve their sort of more of a traditional, risk control model. So that really started this idea that big data does help. And in terms of, building data partners, we have over 150 data partners with us. Of course, we are the biggest aggregator, right? We have data that covers over 700 million people, individuals in China. So, that gave us a lot of sort of capability to help a platform to start code. So if they didn't even have any experience in that particular market, as long as they're offering similar type of products, then we can always leverage off of some other platform that some other clients that are providing similar products, leverage off of that risk control model, and use similar models, tweak a little bit because the clientele, their client-based differences or geographic differences. And still be able to allow them to start lending or extending credit. So that's essentially what established us on the map. And also, data aggregation is not a very easy task. I mean, earlier in that meeting we shared, if you look at the 100 credit, the history of it, and the amount of data we collect to this point, the total investment is almost 2.2 billion RMB. Over the past 7 years. So it's a mind-blowing number in Chinese startups. I think most of the startups won't be able to raise funds that big unless they sell the company, I guess. But it's a lot of investment, and also if you look at the amount of data today that have been accumulated, it was accumulated at an actually increasing pace. Believe it or not, because every time we're processing a loan, processing a application, it leaves a mark, leaves a tag for a particular individual. And that individual, if you look at a database, has a lot of social connections. And based on that connective database, a lot of these factors or a lot of these sort of variables start to create. I mean, in our database, we have over, for every individual existing in our database, we have over 300,000 sort of just very detailed dimensions. And but not one individual does not have all. You know what I mean? They don't cover all. But then when you condense certain very fine variables, it becomes more visible and it becomes a little bit more has higher coverage. So now all of a sudden, 1,000 people can all have this particular dimension. And then, but when you're modeling it, even though you have very strong machine learning tools, and now the computing power becomes very relatively affordable. But still, you're now calculating, over 300,000 dimensions. You would typically compress that into a probably 20, 30 major dimensions, variables, I call it, and then, trying to build up the model from that way. And it's, again, it's judgment as well as machine learning. I mean, you just have to combine the two to be able to, really sort out what data is really usable and relevant. And also, in the meantime, use the machine calculating power or computer calculating power to really quickly find the statistically significant variables. I'm sorry, if it's too technical, it's.
No, I get very nerdy around these things, so I can really appreciate it. But when I'm sitting here listening to AI, machine learning, statistics, need to be able to come up with new business model, pivot, whatnot, I'm thinking, that's going to take a relatively talented individual to work with somebody like the three of you. So maybe to you, Carl, how do you attract talent? How do you retain talent into your organization?
Yeah, and that's one of the key reasons why we went public. Our company generated substantial cash flows. We're profitable. But we wanted global talent because we are talking about AI. We're talking about big data. We do that every day. We with the help of Hong's company, we partner as well. So being a public company provides that instrument to allow for the top talents globally to come and attract to this platform. And generally, I think people are attracted to the fintech space first, but even within that space, we are competing against talent. So having that public company status, equity, allows us to be even more competitive. So that's kind of our tool today. Yeah.
Maybe Hong, Wei, would you like to add anything on how you attract talent to your organization?
Well, we actually spend a lot of time as venture investors helping our companies recruit. At the end of the day, money is money. Money is abundant today in today's world. So people will ask, what is your value add as an investor? Right? One of the things we day in, day out, we do is help our companies recruit talent. And everybody has their own databases and relationships and networks. We're actually in the process of building our own data algorithm to actually mine certain networks and certain ecosystems to track people who are up and coming within, let's say, Ali or Tencent, and then ultimately either they spin out to found their own startup or they are potential recruits for some of our companies. And talent is global, right? Even though the company may only be operating in China, we invest across the world as well. So we're able to have that view of, what is cutting edge technology on a global basis, who are the smartest people, what are the best universities that you can recruit from. We would, for example, invest in an Israeli company and then take them to China and help them partner with some of our existing portfolio companies or people in our network. So, it's not an easy task for anyone to recruit talent, but it's very, very competitive, right?
Yes. Well, we felt it firsthand as well. I mean, when we were trying to expand, back in 2015, when I, first started involving with the company, we had early 2015, we had about 20 people, right? I mean, everybody fit into one room. And then now we're at 600. So, going through that fast expansion really puts a lot of strain on, on your management capability, especially recruiting. When you look at the, today's, in China, of course, when we look at the sort of the total talent pool, on the one end, we have really a lot of the people with banking experience, very seasoned bankers, not just banker on the business sense, but more of, the CTOs or the CROs within, major banks. But on the other hand, you have these internet geeks that are really extremely technical, very, fast moving, and they can come up with crazy ideas that will be, a blockbuster in the future. But then we realized that these are the two extremes. We want somebody in the middle, that has a little bit of banking experience or some banking experience. At least they can talk to banks. But then you have also that experience on the tech world. So you really have to we realize it is we're looking for some sort of the bridging people, like the people that can have better of the both worlds. And it make that talent pool very, very narrow. And that's when we realized, and not to mention we're competing with these guys, right? They're paying top dollar, the public company already, grabbing people from left to right. So it was a very challenging task. But what we realized also is that, sometimes, having the talent, recruiting talent is one step, because you mentioned also how to retain, right? I mean, recruiting them, of course, you got to pay them fair amount of money, and you also got to sell them, some sort of ideology, right? Hey, you're doing a big thing. I mean, this is going to be the future of whatever. This is kind of the thing. Being very honest, I mean, we do this all the time. Because I'm also managing the HR department in the company. We do this all the time. But then, when you realize when they come in, you really have to give them enough space. I mean, top talents require top working environment. I mean, this is not something that, you have a person come in and then constantly check with you, right, to say, hey, what do I do? What do I do? No, you want somebody, the self-starter, the people that can enable some process to go forward, and you also need people to actually actively take ownership. I mean, these are the qualities that we constantly monitor in our our internal talent pool to make sure that these are the future leaders. I mean, out of the 600 today, if you ask me how many can be really like these leaders, well, I think probably less than 20, really, because it's very hard. And also, of course, our venture capital, I mean, we are, our shareholders included Sequoia Capital, included IDG. I mean, you're probably not very familiar with them here, but they're very big in China. And also, Hill House Capital was one of the early investors. And also, of course, a lot of these, right now, some of the state sovereign fund started to invest. And now they're actually introducing a lot more candidates, now to us, because through their reach, they can reach a lot more institutions, and we give them some sort of specific dimensions. And this is basically how we kind of recruit and retain talent. I mean, you just have to expand your horizon, really looking for things. And the funny thing is also we realize that fintech platforms can have a lot of talents as well. So sometimes we do recruit from from fintech companies, because they understand it's a pretty good mix, right? You have the banking experience, you have the tech, so it's better of both worlds. And of course, I mean, retaining top talents means really a lot of investment. That's obviously that's why a lot of these internet companies at the beginning, or tech companies at the beginning, it's very hard to make profit, right? Because I mean, last year we invested about 170 million just in payroll alone. So, yeah, it's a lot of money, RMB for a company like our size. But we'll continue to do that. I believe that you really have to, one, give very fair compensation and good incentive system, and two, when they come in, give them the best working environment that they can continue to innovate. The last thing you want them to be is when they come in and they become a follower. Yeah. You want leaders. You don't want followers in our company. So,
Carl, you mentioned that you are looking to recruit internationally. Is the market beyond China interesting to you?
My honest answer is actually no. Yeah. Many companies talk about global expansion, especially Chinese companies, but we're not. We are still looking at 600-700 million people who are underserved. Today, we have 60 million registered users, and we're serving about 5 to 6 million of them any given time. So this market is too large. And also, for our solution to work properly, certain things have to take place. The broad usage of mobile payments to make transactions really efficient and low cost. Regulatory environment has to be generally friendly for these type of things. And most importantly, how do I say it in the right way? I'll say it in a very blunt way. Credit is about discrimination. It's about determining who gets credit, who doesn't get credit, who gets how much, more or less, right? So it's about discriminating, using data to tell spread risk, right? So some of the tools that we use, we're really, really good at discrimination. Right? That's what it is. That's what it is. So some of the tools that we discriminate people on basically based on location, right? Based on sometimes, you know, type of, I won't go further because we're in Europe, but it's not culturally acceptable in some places. So so we know we don't have, yeah.
Thanks a lot for the brutal honesty here.
Yeah, it's
and I think the reason I wanted to start with you, Carl, because I think it's so fascinating when you come from, say, the West here, where you're kind of thinking that the big dream of China must be to expand into places like this, and then you think about, I mean, I'm from Denmark. There's 5 million people, and somehow compared to 1.4 billion, why on earth would you ever be bothered?
But if I may add, what we do will be entirely applicable in places like Southeast Asia, in India, in Africa, where there is a developing country, and all those things exist. But at this point on, we still don't find a market where mobile payment is so penetrated, just like China. Yeah.
Wei, maybe from an opportunity point of view, where you could say, from everything we're hearing tonight, it certainly sounds like China is at the, say, cutting edge in terms of coming up with new business models, understanding users' needs, pivoting when needed, the analytics part, etc. How much is it when you're looking at companies? How much is this expansion beyond China? How important is this for you, or is it only kind of a secondary consideration from an early stage investor?
We actually see a lot of opportunities beyond China. I think, particularly in Southeast Asia, where we're spending quite a bit of time, because you see the same underlying fundamentals that's happening in Southeast Asia today that happened in China 5 years ago, 10 years ago. Similar demographics, similar rate of economic development, mobile penetration. If you think China is highly mobile penetrated, Southeast Asia is even more so. So there, for sure, mobile-first markets. For example, in Vietnam, there's 120% mobile phone penetration. People have more than one phones, and their first exposure to the internet is absolutely through the mobile. And with that, you gain a lot of data that you normally would not have in a traditional market. And the other interesting thing we're seeing is, the big players like the Alis and the Tencents, they're investing tremendous amount of capital in Southeast Asia because they see that as a next market, as part of their world domination strategy. But at the same time, the last two companies I backed are both Chinese founders, Chinese entrepreneurs, technology team, one based in Beijing, one based in Shenzhen, going after the Southeast Asian market because they know how this game is played. They've seen it before. They know what all the tricks are. They know where all the pitfalls are. And compared to local entrepreneurs, they are able to recruit and attract particularly technology, big data scientists, teams in China that don't yet exist in Southeast Asian markets. So they can outcompete the more local competitors much, much faster. For example, one company I invested in only 12 months ago, in a point-of-sale payments space on the mobile, they increased their loan origination by 10x over a period of 12 months. A local competitor that started exact same time as them, maybe doubled, right? Which is still really great growth, but the Chinese entrepreneurs just know how to run that much faster. So that's definitely a trend we're seeing. Outside of China, so kind of taking what we've learned in the Chinese space and applying it to the other emerging markets.
Well, thanks a lot. I thought that was very interesting. Now we're sitting here in Switzerland, and if we're talking about traditional finance, I'm sure you would be able to mention a couple of players, at least, hopefully UBS, and know it relatively well. And I promised I was going to ask a difficult question tonight, and that's probably this one. Can you tell us anything about the Swiss fintech scene?
ICOs.
Crypto,
yeah,
probably Crypto Valley.
Yeah, I mean,
Crypto Valley, yeah.
Yesterday we had a very interesting meeting with
Crypto finance.
Yeah, crypto finance, and and with the CEO. And actually, I was really blown away by the amount of innovation and really the innovation just in the cryptocurrency area, and starting to make this technology more viable or more acceptable to even the toughest regulators. And it's very interesting, and that sort of, made a light bulb went off in my mind. And in the evening, we're already exchanging emails already, trying to figure out, if there's any cooperative opportunities that go in the future. I do think technology-wise, technology has no boundary. And I think, if you have a good pool of talent, and I just learned that the ETH here, the computer science, is ranked #1 in the world. It's even, preceding the MIT, which is one of the, things that they'll consider very, very good. But it ranked #1. So I think in this area, as long as you put some resources and then really, the application things are probably not as big because but you do have 8 million people here, but then most of them are so wealthy that they really don't need this. But but the technology is good. I mean, the technology is there, and the innovation is there, and a lot of these can definitely be transferred to China. I mean, I would definitely love to hear a lot of these. I mean, in a sense that, we have a fund also. We potentially can partner with, with more seasoned, investors like Wei, and maybe looking at some of these opportunities and really think how can we bring that technology into our company, and then really, speed up our R&D process. So, I just feel like certain elements is not quite matured yet in Switzerland, right? I think, especially the amount of population, the amount of underserved population, and also I think regulations here tend to be a little bit more on the strict side. I guess in terms of protecting people's privacy and balancing that with allowing enough space to do the innovation. I think that still needs to be kind of balanced out in the future. But I mean, there's definitely the future. I mean, there's just not, probably not following the same model as our fintech companies in China. It just have to find its own way.
What do you think about other models then for a place like Switzerland, where you can say there's certainly capital? I think there's a certain degree of talent. Regulation and demand might be a bit different. But would you see any business model or something in China that would apply for Switzerland, or places where Switzerland could be very competitive, say, back towards China? Okay, next topic.
That's a tough one.
This is a very tough one.
Yeah, okay.
It's two completely very, very different market dynamics.
Yeah.
But I always use Israel as an example, right? It's even a smaller market than Switzerland, but is capable of exporting its technology. So I think if you have good technology, you have really smart entrepreneurs, there's no limit to where that tech can go. I think I think Israelis always felt like they had no home market, so they always went abroad. Maybe Switzerland offers more of a home market, so it's easier to kind of just stay here. But I think for the brave and those with initiative, there's a big world out there.
Maybe this then might be an easier question, even if it is quite difficult. What I'd like to ask the three of you is a bit where you see kind of the opportunities as we move another 2, 3, 5 years forward in a market like China, where things are happening so quickly. And then afterwards, I'm going to open it up for a Q&A. So please start thinking about the smartest and toughest questions for the panel here. I don't know if Carl, do you wanna start on this one?
Yeah. So in terms of globally, what I would see in terms of development of fintech, in my view, is 2 directions possibly. And that has to do with regulation. If regulation takes a stronger foothold, what you may see is possibly government-issued cryptocurrencies, more RegTech, business efficiencies in the fintech space happening. But if deregulation happens, then anything goes.
Very good. So which one are we hoping for, Carl?
I am actually hoping for more regulation.
Right.
Because the government has played a very important role in making sure as individuals, as organizations and companies don't go crazy. The government has always had a knob called the M2 supply that they keep tweaking interests, right? That's what the central banks do to make sure economies don't blow up. And they've done a relatively decent job, and they sort of mess up sometimes, but relatively over time they get it right. So I hope that in the world of technology impacting finance, government will be smart enough to embrace it, but allow efficiency to take place so that these inclusive finance can happen, so that some of these savings can be passed on to consumers, so that the world becomes a better place. Yeah.
Thanks, Carl. Maybe Wei, on your side, how do you see the future panning out, and which are the companies you're investing in where you're saying they might be a little bit ahead of their time, but I think this is really where it's going?
I mean, I think in China, right, I think certain subsectors within fintech's is quite well saturated now on the alternative lending space. For example, payments is already dominated by a couple of big players. But in terms of overall financial services, it's a very much underserved market still. So everything from, wealth management, right? China has no real fixed income market to speak of. So there's a lot of innovation that's yet to be had. You talk about outbound investing, right? There's a whole new industry now that's catering to Chinese people trying to invest outside of China. You look at, I think with more regulations coming in, we see a lot of opportunities in the reg tech space, particularly leveraging technology and data. We're actually spending more time, not in the direct to C space. We're spending a lot of our investment, probably 2/3 of our investment dollars are to B2B companies who are helping, other companies solve problems. And another sort of market segment that we see a lot of opportunities is actually in serving the SME space, which traditionally, just like the consumers, are very much underserved in a market like China, because the big banks, they only lend to the state-owned enterprises, and they have no idea how to serve that segment of the market. And some of that's being served by platforms like the peer-to-peer lenders, but a vast majority of them are still very much underserved. And they're the growth engine for the economy really going forward. So we're spending a lot of time, everything as basic as, doing expense management to how do you then connect SMEs to capital sources in order to grow, trade finance for people who are not the Huawei's of the world, right? So we do see a lot of opportunities there. And then the other thing we see actually is now that the Alis and the Tencents are going outside of China. Within China, they control a lot of the ecosystem and data and people, but once they go abroad, they actually realize that these are markets that they're less familiar with. They don't have access to data. They actually need certain technology that they don't yet have. So, part of our investment thesis for investments we make, particularly in markets like Israel, is really to serve those players as they leave China.
Oh.
Well, definitely. I mean, I think in the technology space, especially in the big data world, I believe that the constant innovation through the artificial intelligence technology, as well as the current like the blockchain and application of such technology, will definitely sort of stimulate another round of growth, especially in the technology world. In terms of financial sector, yes, I mean I definitely echo with Wei. I mean we invested a lot of money this year. To really figure out a way, a new model, or new ways to help SMEs to get money, which is also correlate with the government's, China government's strategic objective is to really making sure capital flows to SMEs who create a lot of jobs and really are I would call it this, stability factor for the entire economy. And so we do all of that. I do believe in the SME space, the sort of business service and even, all kinds, the risk assessments for those, data service and other business service surrounding the SME space definitely has a lot of room to grow. The other thing we look at is really, when we talk about RegTech, InsurTech, and all these, it is essentially just using, the current, the data technology or the artificial intelligence technology to really improve, the current process, or really, making the current process more efficient and more effective, and more cost effective and more accessible to bigger part of the population. I think in that regard, in all of these insurance security firms, as well as including the asset management and even now trading, there are a lot of these innovations that continue to pop up, and we see a lot of smaller firms. And even also, in the near term, we're looking at a credit cycle. I mean, China has historically not gone through a large credit cycle when you look at it, right? In the past 20 years, credit cards are a relatively new phenomenon. I mean, they're only 10 or 15 years old. And the entire population has gone through a tremendous growth in the past, 7 or 8 or 9% on the GDP growth on an annual basis. So a lot of wealth has been created, and people are continue, and also you have a lot of big savings. The savings rate is very high in China. So people haven't really got a concept of, okay, we're going to go through a credit cycle, but believe it or not, it's going to come. If you look at right now in the micro lending business, there are already accumulating a lot of I don't call it bad debt, but a lot of stressed assets. And I believe in that, in that sort of sector, there's going to be a lot of opportunities as well for companies that are actually doing aggregating assets and doing the loan mods. It will create and sort of credit management space. It will create some of the other companies. Matter of fact, we already invested in 2 distressed asset platforms that are startups, but then we saw the potential to quickly start to accumulate, millions and millions of loans at a very fast pace, and then they have this, sort of very good algorithm to kind of evaluate, which asset is less stressed or more valuable, which provides a certain factor or a certain variable for us to be able to price these stressed assets and give us a little bit of competitive advantage. I believe that, in the near term, that's also going to be an area to look at in the distressed asset management, and also even, disposal of distressed assets in terms of securitization or some of the other means. So, this is what we look at, especially in the space. RegTag, I mean, we work with regulators all the time. I think especially government officials tend to be very cautious. I mean, I think there's sometimes they're overly cautious. They know there's technology available. They know even through our platform, they can monitor a lot of fintech companies right away. But, in terms of adapting, this technology or really partner with us to do the monitoring is still kind of, we're still in the talks, but then, once you want to push forward, then, there's always that level of resistance. But I think, going forward, I mean, it's going to be, the government trying to be at the forefront of innovation as well. They want to use technology, they want to use data and blockchain to really improve their sort of regulatory effectiveness and efficiency of decision making, so that they don't end up, cutting off one sector. Basically, we have saying that pouring out of water with a baby in it, right? I mean, they can really differentiate, using very differentiating policies to really govern or regulate different parts of the economy. So it's, these are a lot of things. A lot of things are echoing, Wei's point. I think it's a phenomenal thing going forward, even in the next 5 or 10 years. I don't think the innovation or the growth will actually slow down anytime soon.
Well, thanks a lot. And with that, I think we'll open it up for questions from the audience. There's already a whole handful down here. So wherever we get the first from the side, maybe we start here, and then it looks like we can do the row, and then we come here towards the middle afterwards. Yes, please.
Eunice Zender from Asia Society, Switzerland. Now, China has launched this social credit system with the ambition to give each citizen a credit rating and a trustworthy score. On the surface, it sounds like it's very similar to what Hong's company is doing, or maybe they're already a client of yours, I don't know. Maybe they're a lot less sophisticated, or maybe if you already have a loan with Chudian, you have a higher rating, I don't know. What is the impact of such a national strategic initiative on your business and also on society in general?
So this question is for me, right? Okay, I will.
Any of you.
I will take a first crack at it. This is a very good question. I mean, it seems like you're really familiar with the recent developments in China. There are two major components to that strategy, two legs. One is, oh gosh, I got the reform, the FAGA, Reform and Innovation Commission or whatever. It was one of the most powerful organizations within the sort of the prime minister's side, the government side. And then you also have PBOC was tasked as another sort of leg to implement that, general social credit rating system. But I tell you, it's a very challenging task. We view it as a positive development, to be honest. I mean, both sides are already reaching out to us and say, hey, you are one of the leaders in the business. Is there any way? We already give them our proposal and things. It's already on the way. I do believe that, that idea is very noble. But it will take relatively longer time compared to some, like if you're in the States, for instance, you want to look at the credit system, then it's very easy, right? You have 3 credit bureaus that covers almost 85% of the population. In Europe, you probably have some sort of government agency that's doing that too, or government-sponsored agency that's doing that. But in China, at this point, I mean, credit record is scattered among all the fintech companies, banks, and people. If it's licensed institutions, usually those are aggregated at the the PBOC level. But if it's fintechs, chances are we have certain level of data, probably covering 80% at the market space in the fintech world. But to do that, obviously, and also the definition of a sort of the general social credit system is very difficult. I mean, the credit score today, for fintech companies is very specific, right? I want to be able to evaluate your credit worthiness so I can extend credit. But a general credit scoring, that means, does that mean does it get into the moral, evaluation? I mean, this guy is a moral leader, or is like here it's a priest, it's a church, or whatever. But a lot of these dimensions are not very well defined. So I think it's a great thing thinking at the leadership level of the country to have something like that, so that they can somehow evaluate all the citizens based on that, and then be able to provide targeted services to all these pockets of people. But to do that, I think you have to start from somewhere. And I think the launch pad, the launch point, is definitely one, in the finance world, the credit scoring or the credit history for that person in the financial system. And then expand that into educational, expand that into, some sort of social networking. So it's going to be a gradual thing. And, if you look at it too, I mean, you have this one side that's governing all the economic, all the state enterprises and all the government resources. That's the branch that's doing that, and the other one is PBOC. That's purely, governing the licensed financial institutions. So it's going to be a combination of the two. And for big data technology company like us, it's actually it's a very, very easy thing for us to do, because we're already started with, vast dimensions of data. A lot of these dimensions, or most of the dimensions, has nothing to do with directly, the credit, the borrowing of the loan or repayment of the loan. It has nothing to do with that. And so hopefully we will help, be able to help to build that system. And in the meantime, really, be part of this great undertaking. It's a very challenging task. I mean, I don't think it's going to be there anytime soon, to be honest.
Carl, Wei, anything to add on the social credit scoring?
We're actually part of it, so maybe I can comment. We're participating in that program. And there's a business perspective to it, and there's a social perspective to it. The business perspective to it is that we want to have a available common ground scoring system, so that the clients that we serve, the users that we serve, we can have some sort of assessment on it, rather than an arbitrary model that we build or something that we can continue to feed back into. We found this to be a very effective way to help our users. But the social aspect is, what else will this score be used? Because what we do is User will give us the consent, then we will play with these scores and use it. But what would the government do with it? And I'll leave that question. Yeah.
Anything to add, Wei? Or
I think I echo Carl's comment. I think on the one hand, it is a very noble sort of intention, right, to enable the entire population to have access to services, not just financial services. And on the other hand, are we looking at 1984, and ultimately, can that score be used to discriminate in ways that those of us in this room wouldn't think of, right?
Thanks, that was a good question. I think we have, do we have another microphone down there? Okay, well then you have the next question and then you pass it on afterwards. Thank you. And then behind, yeah.
So yeah, I'm Thomas. I'm a regulatory manager for UBS here in Zurich, and it's a great honor to be here. I have a question for you, Carl. You mentioned that you're very good at discrimination.
Yes.
And one of the differences between China and maybe Europe is that we have a very strong system of consumer protection. Now, if I would be a middle-class Chinese and maybe I didn't get a credit from one of your applications, is there any way I could kind of, where I could go, or would I just use another app and maybe hope that they would look at my data differently so that I can maybe get a credit?
Yes, and that's why there are hundreds and thousands of platforms out there beyond just us. What we do is we, in fact, on an aggregate basis, we reject about 60% of applicants because we found certain data points tell us that he or she may default on a loan that we provide. And obviously, as a business, that's not what we want. And that's not what we want for the consumer either, because they are living on the edge. So you shouldn't extend a credit to them. But different companies have different models, and they sort of look at risk differently. And so that's what Hong was pointing out. We're currently seeing a kind of over leverage because too much capital went into this market in the last 2-3 years. And therefore, there was a little irrational growth happening, and money was being lent out to unrational people. Yeah.
Well, I just want to add one point to that, because now you're currently serving all these platforms from the big ones all the way to like 20 RMB loan platforms. We can definitely see sort of the waterfall, if you will. It's more if it gets rejected by credit card companies, where there's a super prime population, and typically they'll fall into sort of the prime or near prime. And there are a lot of players in that space, actually. But if you fall further down, if you get rejected by a few, and then you fall further down, based on whatever reason, right? I mean, you got to start building your credit from somewhere. And then, you fall further down, you probably get into this sort of consumer financing sector where you probably get charged a little bit higher interest, like 24, 36. But then, you quickly can get out of that as long as you start accumulating a certain level of credit with this type of platforms. And for the people who have very sort of bad data or doesn't have cannot really build any credit profile, there are still lenders out there. I mean, those lenders are following the big number rule. They say, at least, if we lend to, 1 million people, I mean, not all these people are bad, right? I mean, and they cannot all go bad at the same time. So there are still, as far as, the capital is so abundant that there's still players in that space to do so. But, in the end, I think inclusive financing, it doesn't mean that give out money for free. It really is, making sure that based on the level of credit that you have, credit worthiness that you have access to, the similar or the suitable credit for you at a reasonable or at a corresponding price, right? So that's essentially what we're seeing.
To just put things in context, the so-called underserved, the small credit is not bad credit. It's just that these people are good. They just are not being served. Just to give you a number to put things in perspective, our default rate is 1%. That's beyond good for most credit cards in the world. Yeah.
Thank you, yeah.
Thank you so much. I highly appreciate your moderation. Also, a lot of inspiring points. Actually, when we look at the name China-Swiss Fintech, so my co-founder here, we are based in Zurich. After 3 years, we focus on the sustainability investment because we know in future our problem in China is that we need a green economy, low carbon economy. This is exactly where Switzerland is amazing that they already developed a lot of solution in the financial sector, and we believe that it can, through our startup, can really resolve the problem in Chinese context. So very interesting that we were selected as a top 15 fintech by the F10, which is a fintech spin-off, and next week we will be in Hangzhou because the Hangzhou government invited us to go to the next last round for the in front of the jury that maybe we can sponsor by Hangzhou government. So I think back to this China-Swiss fintech, I really want to learn from your tips that how we can use this virtual financial areas like in Switzerland, but combined with Chinese demand, especially, as I mentioned, the green finance sustainability, because I'm sure UBS, Credit Suisse, all this ecosystem here, they have a much more advanced know-how than Chinese financial institution. Thank you.
Sustainability?
Sustainability, the green tech and all these.
Wei, maybe, sorry to look at.
Because she has seen so many companies.
I'm looking at you now, Wei, because I'm thinking, is there anything that in your space?
We haven't done anything in the sustainability space.
Okay. We'll count to 3, and then otherwise you take the next question.
I mean, if I may, I mean, one huge competitive advantage of the Swiss is if I had any money, I would trust the Swiss. Right? So, in financial services, even fintech never leaves the word trust. Right? Between me and my users, they have to trust that I'm not charging predatory rates, that I won't go after them with a baseball bat if they default. So these are all part of the solution you have to provide as a sustainable player, right? As a green financial service provider. So I think there's a lot to learn from the Swiss and connect that into possibly a Chinese setting. So how do you be a good financial service provider, right? So it's inherent in the Swiss culture, the best bankers in the world. Yeah.
Thanks for taking that, Carl, and thanks for the flowers and roses here. Maybe the next one here. And then I don't know if there's anybody in the back that wants to have one of the last few questions and start waving. Yeah, there's one. I see one here. Okay, yeah, good. But please.
I'm Thomas Schwarzenbach from 2X Ideas. I have a question for Carl. Now that you move into auto finance or auto leasing, as you mentioned, how is that changing your use of data and actually the utility you have out of the mobile platforms and the data you get out of that? Because it's different size, it's, I guess, fewer customers, I don't know. But yeah, that's the question.
Yes, many people ask me this question, and it's a very, very good one. It's counterintuitive, but it makes the world sense if I explain it. We actually currently have 60 million registered users. We've approved credit to just about 20 plus million, but who actually draw down the credit, even when we give the offer, is only about 5 to 6 million. So we have north of 15 million people who look for credit, got the offer, but say, oh, that's too small, because we're only willing to give a small credit from our own risk appetite perspective. So these are like the best borrowers. The worst borrowers are you give them a credit, even they'll take it and run, right? So these are very good borrowers. So they're looking for a bigger credit size, but we're not ready to give them a bigger credit unsecured. And auto is a secured asset-backed loan. In the worst case of delinquency, we can recover that auto and it's asset-backed. Now, mobile still plays a very, very large role because we've transformed the auto buying experience as well. This is how Chinese entrepreneurs innovate and really change business models. Currently, cars are sold 5, 10 kilometers away from city center, anywhere in the world, right? So, but people buying cars on financing are usually, at least in China, buying cars for the first time, 5, 10 kilometers out, right? So what we do is we make the experience on mobile. You find the cars, you see all the features, pictures, the financing, the cost of ownership. If it makes sense for you then, you go to the city center where we own these experience shops, then you do the transaction there. So the mobile part has created efficiency in the user experience. We already have a very large user group, which through the behavior of the loan interaction by not taking it, gives us a lot of insight into their future performance of delinquency.
And they have the means to actually buy a car.
Yeah. It's actually incredible that what we have done, we made that car affordable to the masses. We're talking about a $15,000 US car. So every month they just repay about $600 US. Yeah.
Thank you. And I think we have time for a last question. There's somebody there with a microphone. Yes, please.
Hi, thank you. As a more, I'd say, technological-based person, I'm a student at ETH studying computer science. My question is, you've talked a bit about it in the first question, about that China has a bit more liberal or more open, let's say, consumer protection and privacy laws compared to more Western-based countries. How do you see China developing, or how do you see these laws developing in the future and the effect on these laws on your own companies, and how are you going to react to this change? Thank you.
Yeah, well, thank you. That's a very good question. I mean, that's extremely relevant to what we do every day. Right now, we actually retain a pretty, I don't want to call it famous, but a very good law firm that actually was on the advisory board for the PBOC and for the Chinese Gongxin, what is it, Industry and Information Commission. I mean, these are the guys that actually regulate how much data you can get via what means, and then also how do you use it, right? From the collecting, storing, processing, and output perspective, they sort of govern every aspect of it. So we monitor very closely. Well, one thing we realize that the regulation today definitely is a lot tighter than what it is even 2 years ago, which is actually a good step towards towards a very well regulated market. It's a good step. It's a positive development. On the other hand, we do realize that at the core of data privacy protection really is, when you are using this data, when you collect data, do you have explicit authorization to be able to do so? And when you store data, do you store it in a very, data security, basically. You make sure that the data has to be within a sort of the physical boundary of your company. There's never opportunity for a big leakage. And then certainly, when you use the data, you process data, you come up with some sort of data products, then this product, especially the output of that product, has to be some sort of, in a form that you cannot basically reverse engineer into the very granular level of variables. Because at that level, you already have certain information that you can, that kind of touches privacy concerns. For instance, you bought a pair of Nike shoes, right, in the past. But then, for us, it's probably a tag that you are more of a sports kind of person. You know what I mean? So if you use those kind of tags that are less sensitive to a particular transaction that happened by that was conducted by that person, generally in the current regulation framework, it's allowed. And matter of fact, it's also encouraged in a sense that, for data partners to start collaborating with each other. There's a big push by the leadership in China to ask all the departments, all the agencies, government agencies, to start sharing data, even amongst themselves, as well as with external parties, can be private enterprises, can be research institutions. Part of the reason for that is they view, well, data, if it's in a silo, in your own area, it does not have that much value. It is when it's connected to the other dimensions of data, then you start have information. You can start looking for trends, indicators, and develop a lot of these sort of derived variables that start making a lot more sense, and it's more valuable. So government realized that as well, and they continue to push. One of the agencies I mentioned earlier that is charged with building the social credit score system, they were actually a champion in leading all the agencies data sharing amongst all different agencies, right? You have Social Security, you have education, you have police force, you have a core system, you have all these, right? And you have obviously, enterprise administrative type of function as well that has tremendous amount of data. But once you put all these together, these can be, one of those, we call it the big systems that, everybody, all the data is connected, and also be able to really develop some sort of useful tool or useful scores to allow for government to use or for business enterprise to use. And the only concern there is data security. So now, increasingly the way we work with our data partners, including government agencies, is that we'll start building models within their own database. We're not taking their original data anymore. We're using, we basically built our engine in their database, and the output of that engine is already a score. It's sort of the subset of the score that come in and, to enable us to build a, sort of a comprehensive credit score. So increasingly we're doing that. So that completely avoid the concern for, getting too much granular level data or PII level data. So to avoid potential, privacy violations. And obviously we invest, big data company like us, we invest, I would say, tens of millions every year. As a CFO, I really hated that kind of investment, but as a business, as a top manager in the company, I do see the value of investing in data security. Part of that is cybersecurity, because our data, is stored on a server farm, in our private cloud, but there's still possible entry points. So we have to have physical firewalls, we have to have physical, security hardware to actually prevent some sort of hacking or massive hacking by, numerous sources. And that costs us a lot. And it has to be certified every year by the police department, the National Police Department. They have their own sort of security experts. They will come and certify that. We're now at a security level at par with the largest banks in China, ICBC. We're at par with them. So, so to make them feel more comfortable to working with us in terms of exchanging certain level of certain data. So I would say, regulation is actually, sometimes is actually a good thing, because it rules out, it weeds out a lot of these other sort of quasi big data companies, so-called, and they kind of flood the market with a lot of these data that are a lot of times contain a lot of noise. So we actually think that in this area, regulation actually helped. It's just that for us, we have to constantly monitor where the direction of the regulations is going to go and adapt our business that way.
Thank you very much. So Hong, Wei, Carl, thanks so much for being here, taking the time. I think everybody has witnessed what I think is a very, very insightful event. As being in Switzerland, I guess we recognize that we might not be able to compete on all these metrics when it comes to big data, analytics, etc. So we thought we'd give you a little present, which is very Swiss and hopefully still a competitive advantage to Switzerland. So we brought you some chocolate.
The gold bar.
What
a surprise!
Thank you
very much, Hong. It's a pleasure.
Thank you very much.
Wei, thank you so much.
Thank you.
Yeah.
Carl,
Thank you very much. Thank you.
That or the next hottest token.
Yeah, thank you so much. And for the rest of the audience, we have an apéro downstairs, so we hope you will spend another half an hour with us and continue the discussion on this exciting topic. So thanks again for coming by on behalf of Asia Society Switzerland and UBS. Have a nice evening.